Hi, well, I went long corn today. I wanted to tell you why. So I got in long one contract as close to the close as possible because I was waiting to see where this candle was going to close in relation to the 8 exponential moving average, which is this orange line. You could see this little wick here. It was going up and down and up and down, and it might have closed below it. And my rule for myself is to enter when if it closes over the 8 EMA. So I waited to the last possible second, and actually, the grains market in the Eastern Time Zone closes at 2:20 in the afternoon. I got in at 2:19 and 12 seconds, and it looks like it closed right on the 8 EMA, but it's actually a little bit above. So the candle close was 375 and a half, and the 8 EMA was 375.16, so technically it did close a little above it, just barely enough to satisfy my rule. So we started out with a pennant or a triangle, and it broke the bottom trend line. See this white line, bottom trend line, broke that, came down, pretty much made the expected measured move, and now it's bouncing. So let me go through what I'm seeing. The first thing is there's a morning star. So this candle, and then a doji, and then a green candle. Those three candles together uh, creates a candle pattern called a morning star. And the stochastics are below 20, so that is the oversold condition. So you got a morning star in an oversold condition. That's a very bullish reversal pattern. Excuse me. And then, like I said, we have the close over the 8 EMA, and also this is light blue, although it probably looks like it's white. You see it comes down here. It's a little hard to see, but a lot of candles closed under. That's the Bollinger Band. That light blue thin line is the lower Bollinger Band, and a lot of these candles closed below it. This candle closed below it. This candle closed right on it, maybe just a tiny bit below it. This closed below it. This closed well below it, and this closed right on it, and now we're bouncing. So I think it's one out of every 19 candles on average will close below the Bollinger Band, or better said, 19 out of 20 or 18 out of 19 candles close inside between the Bollinger Bands. So for this number of candles, say 3 or 4 candles, all closing below the Bollinger Band in a row, that means a lot of candles have to close within the Bollinger Band. So it's not a strong technical indicator, but it does support the uh, the decision to go long. And let's see what else. Well, that's pretty much it. That's enough for me to decide to go long. So let's take a look at the targets. So I've identified three, excuse me, likely targets. Um, this is the 50 retracement level or Fibonacci level. So if you draw your Fibonacci's from this low down here, see it's from 0%, 365 and 3/4, up to the 100% level, 398 and 3/4, which is the top of this candle. This is the range that it just came down in, okay, that range. So the Fibonacci retracement levels, this would be 38% back, 50% back, 61.8% back. So the first target is a very common fib to hit, which is the 50% level. If it goes a little bit further, it'll hit the 61.8% fib level, which is the one that I'm going to pick as my initial target. And then even a higher target would be this trend line from the triangle. This red line coming in, that's the 50-day simple moving average, which is coincident right now with that trend line. I expect that's going to come down some, but that would be for a more aggressive target, that would be a third target. So what I want to see is over time, if this goes in our favor, this price will go up, the candle will go up, and during that time, the stochastics are going to continue to go up. So depending on where the stochastics are, as price hits our targets, might influence me to change my mind. So in other words, if the price gets up to the 50% retracement level and the stochastics are already well overbought, I may change my target to that lower target because it's already overbought. But if when we hit the 50, there's still considerable room left in the stochastics, I'll continue to hold my 61.8%. So as an example, and then if I get close to the 61.8 and I still have room on the stochastics, I might bump it up a little bit to hit the 50-day simple moving average. All right, and what's the risk reward? Very important. So I got in at 376, and I put a stop in just under the bottom of the morning star, so under this candle at 365. So my entry minus my stop is 11 points on May corn. So that's $50 a point, so it's $550. The reward, so if I pick my 61.8% fib level, that's 386 on the chart. So if I get out at 386 and I've entered at 376, that's 10 points times $50 is $500. So it's really close to 1 to 1, and I think I have a very high probability of hitting the target. I think it's going to continue up, and some of the other grains have gone up aggressively, like wheat, for example. So I think I have a very good chance of hitting it. So a 1 to 1 risk reward, it's not great, but it's sufficient given a high probability of this trade being a win. So let's see, that's what I got. Thank you very much. I'll keep updating this and we'll see how it goes.